Hi, welcome back. I want to talk about The Big Short, the movie, the book. I'm sure most of you have watched it, read it. It's a great movie. I really enjoyed it. I enjoyed the book too. And perhaps the most famous person to come out of that, Michael Burry. And I think that a lot of traders and investors learned the wrong lessons from The Big Short. If I asked most people what was it about, you'd say it was about a bunch of very smart people who identified there was a potential collapse, and perhaps you would call it a mispricing in an instrument. They shorted it and they made lots of money. Now, from the Big Short, there's essentially like a whole industry has been spurned over the last decade or so of people trying to predict the next big short. And the doom and gloom mongers, I've mentioned about this before on social media, are always there trying to tell you there's another big short coming up and this market's overvalued and the economy is going into recession. It's a huge industry out there. It's how you get likes on social media. It's how you build up a profile. Okay. But the real story of the Big Short, there's another hidden story that is really important to understand. If you go back to the movie and the book, you'll see that Michael Burry was literally days or perhaps weeks away from his investors pulling their funds from him. After several months of losses, the investors were getting fed up with losses and they nearly pulled the funds. If the collapse hadn't occurred at that moment, if it had been delayed by another month or two, in those instruments or in that market or the property market and the related instruments, we may never have heard of Michael Burry. While the Big Short focuses on a few traders who made lots of money on that, the ones we don't see are the ones that also thought that that market was a big short, but didn't make it to the end because their losses carried them out. There would have been many, many more of those sorts of traders. And this is the lesson I want to talk about. If you think that there's a bubble in a market, if you think a market is exuberant, okay, it's one thing to say, oh, it's high price, I want to short it. It's actually very difficult to do so. You need to be able to carry that trade. I met a trader last week I was chatting to, and he was telling me how he's been short the Nasdaq for over a year. Now, there are many people for the last year been talking about recession in America and overpriced assets and overpriced stocks and overpriced Nasdaq and overpriced this and that. Many people have been shorting and shorting, and as it's gone up, they keep talking about it's a bubble, it's a bubble. It's important to understand here that it might be, and I'm not going to go into whether or not we're in a bubble or not right now. I'm just going to talk about how to trade it, okay? The fact is, like that guy who shorted the Nasdaq over a year ago, he's probably offside 40, 50% plus right now. He needs a significant correction. Even a 25% correction now doesn't make him profitable. And a 25% correction in any index is a big one. He needs now a huge correction. The other point is, does he make it there? His losses are piling up. Will he even make it to the point of any correction? Rule number one when you're trading in these sorts of markets is an old John Maynard Keynes quote. The market can stay irrational longer than you can stay solvent. So you've got to think about this very carefully. How do you structure a trade? Even if you think it's some kind of exuberance, ask yourself, okay, what does that mean? If this is a bubble, what happens in a bubble? For a long time in a bubble, the assets go up. Just shorting them all the time, there are so many people who didn't make it to the end of the dot-com boom. Kept shorting for 2-3 years, and in fact just lost everything. I've known many traders do that. You hear about the winners. There's a lot of people don't make it there. George Soros, states, and he learned his lesson early on this type of market, that if you think you're in a bubble, you should actually be buying that asset if you're in a bubble. The difference is when it starts to turn, those that are skeptics that believe it's a bubble will sell quickly and go short, whereas those who believe it's a real asset will keep buying on the way down. And that's an interesting perspective. The point is you need to structure a trade that can keep you in the market. So the guy I spoke to the other week, and there are many people like him who have just been short the Nasdaq for the last year. Just shorting the Nasdaq, it may not get you to the end because the losses are piling up. Whereas you need to structure trades differently, and there's a number of different trade structures you can do. The more of a knowledge you have of different trades, the more you can do that. But structure a trade differently. It needs to keep you in the trade, and this industry is littered with losses from traders who were right too early. and there's no point in that. So the lesson of the Big Short of, oh, if you think something's overvalued, you short it and you'll make lots of money. No, you may short it and get wiped out before anything turns. And that's, of course, if you're right. Because the second point is, how will you identify if you're wrong? You always need to do that as well. So coming back to the Big Short, the lesson of, being smart, identifying a Big Short, making money. Oh, it's not that easy. And it wasn't even for them. The real lesson was, how do you stay in that trade? Because even the most famous man to come out of that movie and that book, we nearly didn't hear about him. He was nearly at the point where his investors had almost saying to him, we want to take our money out. It's very difficult. So understand that, and understand that you'll need to structure a trade that can keep you in this market, because the market can stay irrational longer than you stay solvent. So as I say, I think people learn the wrong lessons. I see lots of people right now, there's an industry spawn to try and predict the next Big Short, and you think that's going to make me lots of money. Well, my mate who's, this guy that's just shorted the NASDAQ for over a year, even if the NASDAQ fell 40%, yeah, he's probably going to be on side at that point. Okay. But risk reward, he's not going to be on side much. He now needs a massive fall to make any kind of decent money, and on a risk reward basis. And in the meantime, he's had a year of losses, 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 losses. That is not easy to sustain. So remember the main lesson to learn. The market can stay irrational and you can stay solvent. If you believe this kind of stuff, you need to trade accordingly and stay in the game.